Hello, hello, hello. How's it going, everybody? Good morning, good evening, good night, depending where you are in the world. Welcome to a Capital Hungry New York session live stream where we'll be doing some market analysis and also breaking down NFP for some potential trade ideas to close off this week. Hopefully everybody can hear me loud and clear, as well as can see the screen right now. Should be news to the left, news headlines to the left, gold in the middle, 1 hour chart on gold. How's everybody doing today? Excellent, excellent, excellent. Okay, so I wanted to start a little bit earlier here before non-farm payrolls. So over the next hour, we can go over some analysis and also give some educational information on the fundamentals and technicals in play across trading pairs. Okay? So, I know obviously everybody gets their emotions going up during NFP days. The retail traders, the hyenas, the herd mentality people, they get their panties in a bunch, they get their palms sweaty, they get their dicks hard, heart racing, all to crash their $200 account and wait till their next paycheck to trade again. But that's not what we do here in the Capital Hungry stream, okay? We are here to actually have a solid understanding of what's going on in the financial markets so we can trade effectively, understanding the risk management, probabilities, and what's actually impacting these charts. You know what I mean? So don't worry, everybody, relax. There's gonna be a lot of hyenas that come into the chat over the next hour. You're gonna see the amount of viewers increase every minute we get closer to NFP, and you're gonna see the amount of comments in the chat increase every minute we get closer to NFP about sir, buy, sir, sell, buy stop, sell stop, sir, placing where? So just get ready for that, okay? Just get ready for that. Let those people know, relax, all right? Let's think about this realistically. You're not going to change your life after one NFP day. You know what I mean? Like, I know NFP brings a lot of volatility. You can make some money. The markets move really quick and aggressively. Everybody's looking at it at the same time, but it's not going to change your life. Okay? So let's just actually break down NFP. Let's just actually understand the impact it has and how we can learn to trade it. So we can walk away from this stream, we can walk away from this day with some lessons, with some value, with some education. Okay? So anyways, everybody, before we jump into it, yeah, it really is. And we've all been there before. Where you will be trading an account, you're doing well, you're building it up, and then you crash it all on NFP or on like an interest rate day because you're trying to play a gambling guessing game. And you know what the thing is about something like NFP? Even if your prediction is right, because of the market movement and setup of order flow, how many times have you seen liquidity grabs or price grabs in one direction, like especially on gold, that can be 50, 100 pips before continuing in the other direction? Like, for example, let's just say we all think NFP is going to be bad. We think that data is going to be poor. So that means that overall gold should push up. Gold should be more bullish, right? But it's not that simple. How many times have you seen gold do a liquidity grab 50, 100 pips before actually continuing up with the trend, getting those buy orders collected from a smart money perspective, and then continuing back up? But for a manual retail trader, those price grabs will end up fucking you over and destroying your account. You know what I mean? So that volatility with the potential spread and spikes with the potential spike in spread, right? And of course, the spike in volatility, you can have these price grabs, liquidity grabs, where your retail trading account is most likely not going to be able to handle that. You might get slippage on your entries or stops. You might get your broker freezing during these time periods, get caught in these liquidity grabs, and so forth, right? So, what I have always taught within the Capital Hungry webinars and overall is to learn the impact of the data, align the fundamentals with the technicals, bring the news information together alongside the technical analysis of understanding the order flow movement. And I'll break this all down for you. Don't worry, we have an hour, right? So we have time until NFP. And then once the dust settles, once the noise settles, even 1 hour after the actual NFP release, there's way cleaner moves. Even the following week, there's way cleaner moves. You know what I mean? So anyways, through this webinar right now, we will be going through and giving analysis on other pairs for scalp and day trade ideas on GJ, GBP USD, Euro USD, USD CAD, and US 30. But first, what I'm going to go through and talk about is analysis on gold, what has happened to gold, the reason why it's moved the way it has so far, and what I expect with the NFP data, as well as what's going to happen to gold with NFP. Okay, so first, let's just go through the stream reminders for anybody that's new here and anybody that doesn't know how we go about doing our analysis and trading within the Capital Hungry live streams. But this is not direct financial advice. Feel free that once I go through the process listed in the description, that after that you can feel free to ask questions about technicals, fundamentals, and overall markets. Do not ask for direct signals. Any questions about Capital Hungry private service, just go to the website. You have all of your free resources linked in the description, linked in the chat, and linked on the screen in front of you, okay? Now remember, at the end of the day, okay, we are manual retail traders. The biggest impacting factor to our trading success or contributing factor to our trading failure is our psychology and emotional control. There are too many people who have absolutely terrible trading psychology, no long-term goals, no trading plans, no potential perspective on what they are trying to accomplish or achieve, no focus on the risk management or probabilities, and all they do is just open an account with a broker, download MetaTrader, open TradingView on their PC, and they think they're traders now, right? Just because you show up to the charts every day and join somebody's live stream doesn't mean you are a trader. Just because you're looking at a chart every day and thinking, oh, this looks good, we can go up a bit, we can go down today, that doesn't mean you are a trader, okay? So at the end of the day, we have to understand the statistic that no matter what they show you on social media, no matter how many people show you that they only win and they never take losses and they always profit, that at the end of the day is completely false, because the statistics don't lie, the numbers don't lie. 90+% of retail traders consistently lose or quit. And that has really nothing to do with their fundamental knowledge or technical knowledge. All of that can be developed just over a period of time of putting in consistent effort and having strong work ethic, right? It really boils down to the psychology and the trading psychology, because at the end of the day, the market is made up by man. It's a human-made market, and it follows human psychology, concepts, and principles. And at the end of the day, the financial markets take advantage of human inefficiencies and weaknesses, such as the constant chase and greed, chasing short-term pleasures, not being able to control emotions or think critically or think rationally, right? So this is the same reason why if you look at statistics of anybody who tries to go above and beyond or be great in life, whether they're trying to be a professional athlete, whether they want to be a high-paying doctor, whether they want to be a high-paying lawyer, whether they want to start their own business, the same statistic carries over. 90% fail, right? And it has everything to do with the human psychology. Okay? So just keep that in mind. Now, let's get into the meat and potatoes. Okay, so what we see with gold here is on the higher time frames, we have been a lot more bearish. And overall, what we had take place in the previous week was a massive sell-off on gold that dropped to the previous demand zone here. I will show you guys to the left. So you can see this very key price sensitivity area on the higher time frame around the 1790s on both the buy and sell side, right? The previous week, we had a fundamental catalyst being the Federal Reserve interest rate decision, where they brought a more hawkish tone towards economic recovery and interest rate hikes. This led to a downside move and investors pricing in those near-term rate hikes as well as more hawkish tone, and that being digested with the short orders flooding gold down to the 1790s to close off the month of January. Okay? So what we have to understand is everything that was said in the interest rate decision in FOMC with what happened the prior week with this move, that was priced in. That was digested by investors in smart money and drove us down to this very specific price point of interest. Then, to start off the new month, as we're setting up the order flow for February, and as we technically failed to break this very specific price point of interest here, you can see we saw sellers start to take profit and create this corrective pullback structure to revisit better sell points before possibly continuing down further here. Sorry, freaking froze there for a second. Right? So, I was also sharing this analysis in the Monday market update webinar. So there's a few things we have to understand. This downside move, the fundamental impact of it was a hawkish Federal Reserve and what Jerome Powell said during his speech. But what we also have to understand is all of the events that took place were priced in and digested during this move to close off the month, right? What we also have to focus on is that the Federal Reserve and Jerome Powell stated for them to continue with more aggressive interest rate hikes and to continue down the path of a hawkish tone towards economic recovery, they need to see continuing rebounding economic data, right? So these events were priced in. For the new month, we started to enter a pullback phase. We came to retest the 1810s and 1812s and had more sell orders flood the market all the way to revisit these previous lows, but with a huge snapback in price. So when I'm breaking down the movement of order flow, this is what I see so far. Number one, we have to understand this very strong demand zone around the 1790s. Number two, the Federal Reserve interest rate decision move was priced in. We were still very bearish here on gold. We had a very large impulsive bearish move from the 1850 highs and about a 50% correction to start the new month back up to around 1812, 1810s. As we had that pullback to start the new month, more sell orders flooded the market, and it was enough sell orders to drive us down back to these previous lows and demand zone. But clearly here, yesterday, even though we had enough sell orders to drive down back into this demand zone and back to revisit these previous lows, clearly the sellers took their money and ran, and a shit ton of buy orders were collected here as the following hourly candle bullish engulfed that candle, that previous bearish drop. And you can see still very strong respect to this demand zone, where when you're looking to the left, we've struggled to break below this area since December before closing off the year, right? And what I want you to understand is this is looking like it was a price setup for NFP to come. Because if you notice that the ADP data on Wednesday this week was extremely dog shit. And now let me show you that. So I'm going to talk about the NFP right here. Sorry, it's already right here. But what I want everybody to remember and understand, I accidentally opened like 10 windows here. What I want everybody to understand is on Wednesday this week, from the private sector reporting, the ADP data, we can see it was extremely dog shit into the negative integers, right? Now, the private sector data isn't an exact indication of the overall labor market data, but it does give a bit of a reading when you have a drastic change like we had on Wednesday. So that very poor private sector data counteracts and goes against what Jerome Powell was saying about seeing stronger labor market and needing to see stronger labor market. So what we saw is we had that effective downside move. We were still respecting the bears even with this pullback structure because it was still only within the range of a 50% correction of the overall bearish impulsive move. And we can see we still had sell orders flood the market from that area and have enough sell orders to drive us down back into those 1790 lows. But clearly a shit ton of buy orders were collected here the same time we had really bad ADP data the day prior, and we're setting up for potentially NFP today, right? So what we have to look at is a few points. Even with when a few points we're taking away, right? We haven't been able to break below this price point since December of last year, before this year started. Even with the hawkish tone of the Federal Reserve, we still didn't have enough seller order flow to break below this price point. Even when we had this pullback for the new month, we still did not have enough validity or seller order flow to break below this price point. And now you can see we're having this double bottom rejection in this area where it's looking like a lot more buy side liquidity is being generated. And if we can see that NFP is going to be poor today, where the expectation is that it's going to be poor and it's been trending down over the last 6 months, we might get some liquidity grabs. But at this point on, with the Federal Reserve interest rate information being priced in and digested, with the buy orders being collected at this 1790 demand zone, with this secondary rejection here, with the extremely weak ADP private sector data, and with the expectations of a poor NFP just to start off, just as we're starting off this new year, as long as we stay above the 1800s, even if we get liquidity grabs, it's looking pretty good for some gold upside off this area. For me to really see any further sells on gold at this point, the non-farm payrolls would have to be extremely strong, and we'd really need to be breaking below the 1790s, because we're really having way too much struggle even with those fundamental catalysts to break below this price point. So clearly some buy orders are being collected in this area. Does that make sense for everybody, that thinking process, or no? Just in terms of the order flow movement. So you can see with the Fed interest rate decision, the buyers first took their profit, the sellers flooded the market, they made their money, Because what we have to understand, right, is that there's billions of dollars moving through these candles we observe. Gold melting from 1835 to 1790s, $40-50 an ounce, is a huge intraday move, right? And that was due... Sorry, your throat's so raspy this morning. And that was obviously due to the Federal Reserve interest rate decision in being more hawkish. But that was enough fundamental volatility to drive us down to these lows and fail to break. Then, even when we had a pullback and more sell orders enter the market from the 1810s, that was still enough volatility to drive us down to these lows, but again, failed to break, and more buy orders being collected in that area. So now, let's look at this. What I want you to see is that with non-farm payrolls, it's expected that we can see it's expected that we can see worsening data, right? 150K forecast from a 200K prior. But look at these subheadings, okay? This here, what they don't show you on a lot of other websites is Economist minimum and maximum expectations for this report, meaning the worst possible case and the best possible case, right? Because of the private sector report we saw on Wednesday being in the negative, economists have adjusted their minimum to negative integers for the possible private payrolls and NFP, where the worst possible case, they may see minus 400K. And they even see a possible prediction surprise of minus 70K. So, with the current reasoning stated about the fundamentals on gold, what has already been priced in, the order flow movement from that 1790s demand zone in clear-cut rejections, if this NFP data is worse than the prior, worse than the forecast, and especially if it enters negative integers, then we're going to see either a quick liquidity grab and then continuation up, or just a straight continuation up. The only way gold is going to revisit these lows or break these lows and for me to sell is if non-farm payrolls blew these numbers out of the water and was extremely good. But the likelihood of that is low. Now let's look at this, okay? This is a NFP non-farm payrolls chart. Okay? Now, I want you all to understand something. From a macro perspective, this is a historical chart from about the last 20 years, okay? You can see about in this range here is what normal non-farm payrolls data generally ranges in, right? From these lows to these highs. From sometimes the 50,000, 100,000 job creation lows to the 200,000, 500,000 job creation highs, right? This is what is considered normal economic data for the non-farm payrolls labor market report, ranging within these levels, okay? We can see that this abnormal spike down was obviously when the US lockdowns were going on. This abnormal spike up and surge in job activity and economic activity was coming out of lockdowns. Now, ever since then, we have been normalizing in our figures, and over the last 6 months, relatively starting to trend a bit more down. Even if the labor market information on non-farm payrolls does drop a bit lower into the negatives, that will have a negative impact in the short term, but in the long-term macro range, you're still just entering pre-pandemic ranges for this data, right? So first, I want everybody to understand two things. One, we're back to pre-pandemic levels and back to pre-pandemic trends on the labor market for the US. 2, seeing this is abnormal and seeing huge amounts of jobs being created or job availability is also abnormal. That's not something that can be sustained for a continued period of time. That is not normal. Being within this blue range, that's normal over a historical period of time. Okay? Now, when you look over the last 6 months, you can see as the US has been out of lockdown for a consistent period of time now, they were really only in lockdown for a few months or a short period of time at the very start of the pandemic, and then had a huge surge in economic activity and recovery. But since then, now figures have been starting to normalize. The non-farm payroll figures are starting to drop and trend a bit more down over the last 6-month period now. Right? So my expectations are that the non-farm payroll is going to be poor. Somebody says, not sure how this would help anyone scalping. Well, for someone who's a scalper, you're probably looking to catch 10 pips, 20 pips, 30 pips. You're probably looking to trade lower time frames and short time frames. Well, good luck trying to do that when NFP is going on through your scalping session. You fucking retard. I hope you enter a scalp not having a clue what's going on with NFP. And it fucks your account, and then you're going to say, no, not sure how this was going to happen. Right? So anyways, number one, we have a downtrending over the last 6 months NFP. We also had an extremely weak private sector report. You can perfectly scalp NFP. Uncle Ted will tell you that. If you patiently wait for your confirms of the data, the technicals, and then wait after, you can easily scalp non-farm payroll volatility. There's actually probably multiple webinars on my YouTube of us trading NFP days. That doesn't mean we're playing a guessing game, entering orders before NFP. We're not gambling trying to play a guessing game and entering something at 8:28 a.m. Eastern, 2 minutes before NFP release, with my dick in my hand and my palms sweaty, praying to God it goes my way. No. We wait for the economic data to be released. We let the impact take place. We let the noise settle. Then we attack the market and take our jab with the correct confirms in line, controlling our heart rate, controlling our emotions. There's plenty of traders in here who have done that. Ted is very experienced in doing that and grabbing his piece of the pie and not being greedy and waiting for the confirms. The people who say they can't trade these types of days are the ones who try to gamble before the news. And they're the ones who try to get what we call hero trades. Okay? But anyways, what we have to understand is regardless what the data is, even if my prediction on the data being a bit worse is wrong, we're not taking trades before the actual NFP release. Right? We're waiting to digest the data, see the impact, then catch our piece of the pie with high probability in our favor. Not trying to play guessing games or gambling games. You know what I mean? So anyways, everybody, right now it's just New York open, North American session open. We have 30 minutes until non-farm payroll release, which is our main focus for impact on US dollar and gold. But so far, I'm expecting weaker non-farm payroll data. Okay? But that's not all. That's not the only focus here. What a lot of people choose to ignore during the NFP day that they all name is that it's not just an NFP day, it's labor market data overall for the US economy, right? You have private payrolls. What's more important is the unemployment rate, yearly average earnings, and the non-farm payrolls here, okay? They're also expecting a possible drop in a minimum expectation on unemployment rate. But the main forecast is it just staying stagnant. The minimum being 3.7, the maximum being 4.0. Okay? Remember, how many people have observed non-farm payrolls before, and you'll see when the data gets released that it'll do what we like to call a whipsaw impact. Whether you're trading US dollar pairs or whether you're trading gold, you'll see that it will spike up, sometimes spike down, and then will start to range, create a double-ended dildo candle, right? That's because a lot of people, especially manual retail traders, they only focus on the non-farm payrolls data. But the unemployment rate and the average earnings also contribute to the labor market sentiment overall. You know what I mean? So what we have to understand is the best conditions for us is if we get one-sided volatility in data. Do you understand what I'm saying? That means we would either have terrible non-farm payrolls, terrible unemployment rate, and bad average earnings. That is the best conditions possible. When you have that the economic data is all giving you one-sided information, such as all being very bad data, those are the days where you might get a little liquidity grab and then gold just starts to pump up. You know what I mean? So what would be ideal for us in the possible scenarios now are as this. Number one, our expectations go as is, and the non-farm payrolls, the unemployment rate, and the average earnings is all weaker and worse data across the board. This will lead to an impact of weakness in the US dollar, meaning pairs like AUD USD, Euro USD, GBP USD would push up bullish because you're having worsening US economic data that also goes against what the Feds just said on their last interest rate decision that made the dollar so bullish that prior week. So that would have a bearish impact on the dollar, and that would have a bullish impact on gold. If we get that the non-farm payrolls is bad, the unemployment rate is neutral or showing an increase, and the average earnings is also worse. That would give us the ideal setups where that number one scenario is getting bad economic data. Most likely then, we'd see liquidity grabs and 1803 gold buys, 1812 buys, 1820 gold buys, and probably go up into the 1825s and 1828s. Okay? So scenario one, non-farm payrolls, unemployment rate, and wages, bad data. We let the market impact take place. We confirm the data is bad. We wait for our price action confirms of a pullback in support at either 1803s, the breaks above 1812s, or the breaks above 1820s, and we grab our piece of the pie. Nice scalps or intraday trades. That's scenario number one. Okay? Now, scenario number two. My prediction about the economic data is completely wrong, and the non-farm payrolls ends up blowing this data out of the water, and it's way better than expectations, and the unemployment rate is dropping, and the average earnings are going up. So the earnings are better, there's less unemployed people, and the payrolls, non-farm payrolls show an increase. That means my prediction is wrong, the data is good. That would be a bullish impact on the US dollar, and a bearish impact on gold. But I would only sell gold below 1795 and below 1789. Okay? So scenario number 2. Now, understand, scenario number 1 is just my main bias in my prediction. But both scenario 1 and 2, we can adapt to and play accordingly. If scenario 2 plays out and the economic data is good, then we can sell below 95 and 89. Okay? Now, scenario 3 is the worst case scenario. Scenario 3 is getting neutral to mixed data. Scenario 3, when you get neutral to mixed economic data, one of the reports is good, one of the reports is bad, that's when you get the dildo candle. That's when you get a spike down, a spike up, and then you just start to consolidate or range. You know what I mean? Right? Any questions about that? I'm not taking a trade before NFP. I'm taking it after. Do I live trade? Yes, I've been showing my live trades for maybe 3 years now. Since 2019, since I was trading penny lots. Up to what I do now. I linked the free Telegram analysis channel. You can go check that out if you wish. You can see my withdrawals, live trades, proof, analysis. Okay? So, scenario 1 is my main bias, bad economic data. We either get a quick liquidity grab to repeat the buys at 1803. We just break above 1812. We break above 1820. Bad economic data, US dollar drops, gold goes up, non-farm payroll, unemployment rate, wages, all bad data. Okay? Scenario 2 is also something we can adapt to accordingly, where my prediction is wrong, but the data is all good across the board. And we can sell below 95 and 89, no problem. Scenario 3 is the worst case possible for us as retail traders for scalping or day trading, where if the data is mixed, we're just going to have a whipsaw move. Okay? Yeah. Yeah, for anybody who wants to see my past webinars, analysis, people wondering why should I even listen to this guy, you can just go to the Capital Hungry resources that are linked in the description, the free Telegram analysis channel, the Twitter, has all the trades that I've taken, live account proof, withdrawals, everything like that over the course of years now. You have hundreds and hundreds of webinars, live trading streams, psychology webinars, market updates, trade ideas, YouTube shorts, rants about society and so forth. Right? Tons and tons. Like I guarantee, besides Raja, there's nowhere else that you will find this much content on trading in our retail community. You know what I mean? Because Raja be streaming every day, so he has a shit ton as well. And he's done a lot of educational webinars on his YouTube as well, like long crash courses and other breakdown videos and so forth. You know what I mean? Yeah, there's rants of me. You can see what I look like as well. I think the last rant I did was here. The secret to losing fat and not being a fat ass. I did this one here as well. How to be productive. Yeah, there's a lot of rants of me. Time. Holy.
life.
Fuck is this?
So I
Holy
suggest
shit,
that
who the fuck is
anytime
this guy?
you are dwelling on the
Whoa.
past, remember that it doesn't exist anymore.
God damn.
It's
what is
irrelevant
that?
and it doesn't
What are
impact your
these?
future.
Do some
It is not
analysis
the
over
current
here.
reality. And
What
anytime
are
you are
these
worrying
things?
about a potential future
The
that is
shoulder
yet to come,
pads?
that also doesn't exist.
No, I'm just
The
joking.
only thing that exists.
But anyways. So yeah, the capital hungry YouTube. The capital hungry can't talk, man. Can't talk right here. The capital hungry free Twitter. About to have a stroke. And the capital hungry free Telegram analysis channel. All right. Yeah. Yeah, okay, so in terms of anybody else who is trading dollar pairs, it's gonna be the same idea, okay? Like, let's just say, for example, you were trading some of this pullback buys on GBP USD the same time individually. Yeah, Jack's right. Like with you don't have to see a liquidity grab. You could just see it continue up if the data's bad. You know what I mean? The liquidity could have been grabbed yesterday here. The buyers could already be in play after that huge grab we saw yesterday. That was just prepping the day before NFP. We might just see the breakout. You know what I mean? But we'll see. This Martinez person, man. I feel sorry for human beings that don't have any willpower or decision making of their own. I should have stayed in gold. Uncle Ted made me. You're just a pussy. You don't have the balls, you don't have the cojones to make decisions for yourself. You don't have what it takes. You know what I mean? But anyways. You're a part of the masses. You're a part of the 99% of losers. It's just the way it is. Okay, so anyways, now what I was talking about before we got interrupted was for people who are trading. We talked about the possibilities on I'll talk about GJ as well in a second. Don't worry about that, okay? So for the people who are trading dollar pairs, it's the same scenarios. If the economic data is one-sided volatility and bad data, right? Then we're going to see a continuation to the downside. Yeah, I'll take a trade after the NFP data release, no problem. I'm not going to take a trade before data like idiots. All right. If the economic data to come, like we talked about scenario 1, where the NFP is bad, the wages data is bad, the unemployment rate data is bad, then dollar will continue more bearish, and pairs like Euro USD and GBP USD will have a bounce from these retest areas. Okay? So when we're looking at GBP USD, if the 8:30 a.m. Eastern data is poor and dollar weakens and we don't break above 354, there's a high possibility of getting an aggressive bounce from here to revisit these highs. I would only sell GBP USD below 1.35 if we get scenario 2 with really good NFP data and good labor market data. Okay? The same ideology, the same understanding can be applied to Euro USD and USD CAD. I personally think the labor market data is going to be bad, but we're gonna have to see it as it comes. Okay, for people who are asking about GJ, we're still bullish on GJ after the Bank of England rate decision was more hawkish in tone, and we're still respecting this intraday bullish market structure and higher time frame bullish market structure. Right? So overall, higher time frames on GBPJPY are bullish. If you pull up the chart on the Japanese yen JXY chart, you can see that it is also bearish. So that makes a lot more sense with the market optimism that we've had, that GJ has been overall printing higher highs. We can see from this daily demand zone holding at that 150 price point that every time we have revisited this demand zone, as long as the overall trend is being respected, we end up rallying into higher highs, right? Higher high, bang, bang. Except from here, where we revisited the previous high and had a 50% in corrective pullback of this overall impulsive move, with now having a more hawkish Bank of England. Okay? So, with a more hawkish Bank of England, weakness in the Japanese yen, intraday bullish market structure as well here, what I would be looking for is if we could get pullbacks to 155.5 on GJ, I would be looking for buys in this area. Okay. Yeah. What happened? The video, nobody can hear me anymore? No. It should be okay. I think it should be all right. It looks okay, the connection. Okay, cool. We're good? Okay, cool. Okay, yeah. So anyways, so hopefully you guys heard me. With GJ here, I'd be looking for the pullbacks now to 155.4, 155.5, and playing the continued bullish market structure and intraday trend to start revisiting the highs back up to 156.500 area. Now, this setup might not take place until next week. We might get the pullback, we might get some of the buy orders in play, but the continuation to the upside is probably going to be the move that happens next week to revisit these intraday highs here. Okay? Yeah, I know the Capital Hungry YouTube page has a lot of webinars, so it might be overwhelming of where to start and where to dive into it. But to make that a little bit easier, if you go to my YouTube page and then click the playlist subheading, I organized everything into like 4 or 5 main playlists of like all of the live trading sessions, whether it was during the New York or when I used to do London, the market update webinars, the 1-minute short breakdowns of news and analysis and trade ideas as well, educational webinars and trading sessions and so forth. They're all broken down into playlists. So that might make it a lot less intimidating to start navigating through that information. But I promise you, I don't know what it is. Maybe because it's all free, people think, oh, there's not much value in it. It's free. How could he be given all that for free? But I guarantee you, the amount of information you would learn on the free Capital Hungry YouTube videos is 1000% better than any paid marketer on Instagram. That is a promise, a guarantee. But in the modern society, because it's free, people usually think that it sucks. Like they're like, oh, maybe it's useless. It sucks. Why is it all there for free? Maybe it's not useful. They only want to see all the clickbait shit. You know what I mean? They only fall for like the Lamborghini pics and the clickbait ads and the clickbait thumbnails. Flip your account today, triple your account tomorrow. You know what I mean? So just understand that. It might seem intimidating, but doing anything new in life is intimidating. If you're really skinny and you're really fat and you want to lose weight and you want to go to the gym, that's really intimidating. First going to the gym or trying to learn how to eat better or trying to learn how to treat your body better. You know what I mean? Right? So it's the same thing. When you're putting your brain through challenges, through healthy stress and tension of learning new information or learning new skill sets, it can be intimidating at the start, but that's just because your brain is trying to keep you as dumb as possible. Your brain doesn't want to challenge itself or grow. Your brain wants to make it to the next day as easy as possible. It wants to make it to the next day with the easiest path, the least amount of stress, tension, issues as possible. That's the job of your brain, to take you from one day to the next. The job of your brain isn't to make you a successful trader. The job of your brain isn't to make you a mathematician or to make you a businessman. You have to reprogram your brain into that. The natural order and job of your brain is to take you from one day into the next. Survive. And in the modern society, when we are so far away from survival, the easiest way for your brain to do that is fall victim into all these various pleasures. Sit your fat ass and lazy ass on the couch or bed all day, be scrolling on social media, safe, comfortable, cozy, convenient. Make it to the next day while overall long term you're deteriorating your mind, body, spirit, and health. Right? So we have to take ownership. We have to take accountability and responsibility to make choices to change the way we think and reprogram that. You know what I mean? Yeah, now we're waiting the 8 more minutes until the NFP data release here. I think we're going to get a quick liquidity grab and then start to make our way back up. Yeah, if anybody has any questions, feel free to ask. Wait, they actually they do in the live streams. But you have to watch through the live streams. They're 2 hour, 4 hours long. You can't just say I've never shown that when I've shown my live terminals thousands of times when I'm taking a trade or in a trade. You know what I mean? But obviously you can't make everybody happy. There's always going to be haters and so forth. Yeah, what we were talking about in terms of the goal just based on the technicals is that the Federal Reserve interest rate decision move has been priced in and has been digested. Right? And what you can see from that is after we reached those 1780 demand zone lows, we saw profit taking at the end of the month and start of the new month for February, as we did not have enough seller order flow to break below the 1780s. Then we saw for the new month a minor pullback, more sell orders enter the market, flood us to revisit these previous lows yesterday, but then the sellers take profit, and at that same buyer demand zone I was showing you guys that's been holding for about the last few months, we can see tons of buy orders being collected with the potential anticipation of a bad NFP to come. Right? So number one, the Federal Reserve interest rate decision move priced in, digested. Number two, that was not enough fundamental catalyst or volatility to break below this very specific buyer demand zone and price sensitivity area. Number three, even when we had this minor pullback and more sell orders collected, we had enough order flow to drive back down to here. But again, yesterday failed to break, having a huge snapback and liquidity grab with more buy orders collected in this area. Number 4, this week, Wednesday, the private sector ADP report was reported in the negatives. Very bad labor market data. The expectations with today's NFP unemployment rate is also bad labor market data. If this data is also poor, we might get a liquidity grab to collect some more orders back into the 1800s, but overall should be making our way to the upside. Okay? If that prediction is correct in terms of the technicals on the buyers in play and what I'm talking about, the fundamentals, we should get possible pullbacks to 1803 buys, just break out 1812 buys, and also break out 1820 to scalp an intraday trade with the buy orders collected in this area. The bullish market structure we're starting to form here, and the expectations of worse data and a weaker US dollar. That's my main bias. Okay? The only way I am selling gold is if NFP is really good and we break below 1795 and 1789. All right? For more information about this, I gave a full fundamental and technical breakdown as we were dissecting the non-farm payroll data, how it's been trending, how the data has been trending, what our expectations are, what we saw with the private sector report, and I gave a breakdown of the order flow movement. Okay? Now we just have, okay, 2 more minutes here pretty much. So let's just wait for this data release here and the impact. I personally do not do the buy stop or sell stop orders, but above 1816, 1820, breakouts above there, if the data's poor, would give some pretty nice breakout buys. Or if we pull back to 1803, 1805, fail to break, and the data's poor, that would also give some nice buys. But remember, always manage your risk, follow your trading plan. I'm not always right. I'm just a human being, even though everybody always looks to me like some freaking hero. I'm just a regular guy, just like you, sitting in my room. Right? So, and anyways, if my prediction's wrong and the data is really good, the non-farm payroll unemployment rate and average earnings, we're selling below 95 and selling below 89. But that's not my main bias. The worst case scenario is going to be if we get mixed reports. That's going to be the worst case scenario where we just end up whipsawing. You know what I mean? So, yeah. One sec here. Yeah, what do we got? 30 seconds left? You'll see the results pop up here to the left, and you'll also see it pop up here. I'm going to be waiting for the data report release. I'm going to be confirming if it's good or bad data. If it's bad, then I'm going to be confirming that we get the potential retests and breakouts on the 1 minute for those buys. Okay, so non-farm payrolls came out better than expected. Unemployment rate went up though. That's bad. This is mixed data so far. So good non-farm payrolls, bad unemployment rate increasing. Wages is still good. Let's see what the actual impact is. So far, a minimal impact. Dollar just edged up so far. But we have mixed data. This is like pretty shit to have mixed data. If we break below 1803, we can adapt accordingly too. But so far, the initial reaction, we're getting that initial reaction so far. We still want to confirm that this isn't just a liquidity grab, which we've seen happen with NFP many times before. And not too much of a major impact there. You know what I mean? Really, really minimal impact there. Just doing the normal whipsaw. Mixed economic data. Really sucks to get mixed data. So non-farm payrolls was good. Unemployment rate was bad. Wages, average earnings was still good. So we had we'll see if this data gets absorbed as better if we break below 1803, okay? And we'll adapt accordingly. I'll call out the trade as I get the confirms here, and we're gonna watch the lower time frame. All right, dollar is edging up a bit as well. Let's see if we can break below 1803 here. Okay, so now if this candle closes bearish and we get a minor pullback here and we hold below 1803, we can see possible deeper sell scalps if this data gets absorbed as solid. But we need closures below 1803. Right now it's just rejecting. And this could still just be a deeper liquidity grab when you're looking at the overall movement of gold here. All right. So let's just watch the price action based on 1803. If we close below on this 1 minute candle, this is a good sell area. If we get a quick little pullback here and then continue to hold below. So not yet. Let's see if we get those further confirms. First, we're going to get a little bit of a pullback like we're getting right now. Now, this candle closing bearish still having that minor little pullback. If the next 1 minute candles don't start clearing above these highs, we're probably just going to get those continuous closures below 1803, but no sells yet. No sells just yet. They're setting up very shortly as we get the closures below 1803. Oh man, that 0.500 buy off GJ2 just spiked down at the news. But obviously you can't really enter this unless you had a buy stop or a buy limit. Remember how we were talking about GJ coming to 0.500 for the buys? But how could you possibly enter this? You know what I mean? But that was a really fast 1 minute liquidity grab right to that PPL there. I just want to see the impact on the dollar pairs. So dollars holding more strength. The data's being absorbed as stronger. The sells on 1803 are looking a lot better and solid there. It's looking like the economic data is being absorbed as more optimistic. The payrolls and average earnings is holding more weight than the unemployment rate. So we're having that dollar strength, short-term weakness in gold. With GU though, we're only selling GU below 1.35, okay? For GJ, further GJ buys now are coming up soon at 0.800 here. If GJ makes a little bit of a lower wick, comes back above 0.800, this would be good buy scalps to take on GJ as yen is weakening on that optimistic data. And on GU and our dollar pairs, for Euro USD, with the dollar strength and the more optimistic, being more absorbed as optimistic data, I would sell below 1.43. I would sell below 1.43. USD CAD, I was going to say let's buy above 1.27, but USD CAD, I would buy at the retest of 276. So gold scalp sells below 1803, 1804 area. GJ buys 0.800. GU sells 1.35. Euro USD sells below 1.43, and UCAD buys 1.276. Okay? Yo, what are you guys saying? Relax, yo. Gold dropped like 4 pips here below 1803 yet. It just retested 1803 here. This is like I was just telling you right here. What do you say, gold, man? I said 1803 retest. There's 30 pips. Scalp. Can you guys hear me? Hello? Hello, can you guys hear my audio? Can you guys hear me or no? Yeah? Yeah, that's a scalp. 20-30 pips right there. Secure some partials, let the risk-free runner go. I was just talking about 1803, 1 minute break and retest. 1 minute 1803 sells. 1803. Yes, okay. Yes, there's the scalp. 20-30 pips with the momentum there. And we'll see if we get continuation moves. Yeah, okay, good. Yeah, GJ, I was talking about 0.800 here, but it did that quick bounce there for about 15 pips. Here. Quick bounce. Okay. Yeah. Okay, I thought you guys couldn't hear me. You guys kept saying, what about gold? What about gold? What about gold? Okay, good. That was the 20-30 pip scalp on gold we were talking about, below 1803 with the volatility and volume. And then we were talking about GJ 0.800. For the people who are looking at Euro USD and GBP USD, you're going to have to break below these areas. You're still just doing a deeper retest here for the time being. But the good thing is, so far, that data is being taken as stronger economic data. So you had a good average earnings, bad unemployment rate, good non-farm payrolls. Okay? Yeah. Yeah, 1803 sells. For anybody who's still holding 1803 sell scalps, okay? For you to extend your sell scalps, you're going to have to break below this current... Okay, there you go. 1803. 1803 right there is money. Come on. You're telling me that wasn't money after the data right there? Right at the key level, we waited for the economic data. We waited for the confirms. We waited for the... There you go. Boom. Neo's such a big hit. Neo wishes he was me. Listen, we didn't have to play guessing games here. We didn't have to guess before NFP. Let's go through this step by step. We marked out the two scenarios, correct? We marked out the scenarios of what the economic data can potentially be, right? We marked out that if the data release is good and gold drops, that we will adapt to the sells below 1803. I was talking about this entry, retest entry here, 1803, 1 minute break and retest. Okay? I gave you exact 1 minute price action confirms, exactly what price to enter, what to say, to secure some partials at 20, 30 pips, to let your runners go risk-free. Yeah. We didn't do no buy stop, sell stop. We didn't play any guessing game ahead of time. We didn't care about getting the huge move itself. Right? We dissected the market impact with the fundamentals. We saw that the data was more optimistic. Let's write this down. Okay? All right, everybody. Does everybody agree with this process that we went through? Right? So let's go through it step by step. We had pre-planned scenarios. Scenario 1 was very bad data and we would adapt to gold buys. Scenario 2 was good economic data. The initial prediction was wrong and we had good economic data. That's okay and that's perfectly fine because we weren't taking any guessing games. We weren't taking any entries before the news. Okay? The data released and we have good NFP, good wages, and bad unemployment. I want to confirm how smart money investors and the market makers are digesting this data. Investors digest it as good data because we confirm this as gold has an impulsive move drop and US dollar starts to push more bullish. We wait for those confirms to catalysts to confirm the data is good. Then we start dropping down to our technicals and price action. We adapt to the 1803 key level and price point of interest as a sell area. We wait for the breaks below and hold below in 1 minute retests. We see consecutive stronger bearish price action. Stronger bearish candles, minor bullish candles, consecutive bearish candles making their way down. We extended that trade with initial trade management suggestions at 20 pips and then runners running to 50 pips with multiple retests. Now looking like we're going to come down to 17.95 if we clear these lows. If you were able to catch that gold sell as a scalp or intraday trade from the 1804, 1803, 1802 area, let me know in the chat if I was able to help you out with that information, the knowledge, the step-by-step process, and what we were looking for and why, and if I helped you make trading a little bit easier today. If you guys don't mind, send a like on the stream. Really helps with the exposure and reach. But that's it for today. It's Friday. Everybody go enjoy your weekend. You can always re-watch this. Tons of educational information given there. Okay, everybody. All right, everybody. I'm done for the day here. I'm going to go enjoy my Friday. Hopefully you guys enjoy all this content. You enjoy the live stream. I'll see you all next week for the Monday market update webinars and for the Wednesday live trading sessions. Make sure you guys check out all of your resources linked in the description. If you're looking for a broker to sign up with, check out Dominion Markets. I'm about to play an ad for them right now. And I will see you all next time. Like, subscribe, and share this stream around. Take care. Have a great weekend.